Welcome everyone to this video where I will be analyzing the current situation of Rubis. Rubis is a distributor of energy. The main activity is the distribution of LPG, fuel, and bitumen. It is a French company, geographically diversified, and the split of the revenue is 46% coming from Africa, 38% coming from the Caribbean, and 15% coming from Europe. The company is growing vertically the distribution of business by owning the distribution of fuels, heating oils, lubricant, liquefied gases, and bitumen, as well as the logistics, which includes the trading, the storage, the refining, and the shipping activities. The company disposes business units from time to time to relocate resources to the core businesses, and the main competitors are Vivo Energy, an African player, Galp Energia, present in Europe, Brazil, and Africa, and Sunoco in the North America. The sector is expected to grow at a 2 to 4% annually, depending on the geography. And we have to keep in mind that the distribution of energy is very related to the GDP growth of the countries they operate. This is why it's quite important for the Rubis to be located in Africa. There's a very growth expected from the GDP in this area. The sector has some risks of electrification of the transportation fleet, and this is the reason why the company is also starting to invest in the production and distribution of electricity. In this new slide, we will look at the customer of Rubis, and the company operates in B2B and B2C. The B2B side includes refueling services for aircraft at airports, refueling ships in ports, distribution to the industry, and trading activities. In the B2C side, the company supplies energy to households and also supplies to motorists through the network of fuel stations around the world. Before looking at the P&L, we have to keep in mind that this is a distribution business, which means that the revenue will increase and decrease depending on the cost of energy. Since Rubis is a distribution company, the margins are on the distribution. The cost of energy is passed to the clients. So the changes in the cost of oil, which is the major energy for Rubis, doesn't affect a lot the company. Additionally, the changes of revenue are not indicators of growing and shrinking business. For this, we will have to look at the volumes distributed by the group. Looking at the P&L, we can see the peaks and lows of revenue that are really reliant to the oil prices. But the gross margins remained quite stable. During the last years, the main reason of the decrease in EBIT comes from the increase in personnel costs and depreciation costs. This is because of the inflation pressure, pushing salaries costs, and also the aggressive development of solar plants in the last years. Additionally, during 24 and 23, the company disposed some assets that generated some one-off gains from disposals. In 24, Rubis disposed its stake in one of his terminals, generating 83 million in profit. And in 23, the group received a one-off gain from M&A litigations. Under the EBIT, the company is reducing interest costs, which is always positive. Looking at the competitors, it is not easy to make an accurate comparison because there's different mixes in the revenue and the integration of the distributors of the energy is different in each company. For example, Galp is a distribution company of energy, but they also own some of the production of the oil business. And Vivo Energy and Sunoco are concentrated in the end of the value chain of the distribution. But for a distribution business, Rubis has quite good EBIT margins. In the reporting slide, we can see the different business and their EBITs. From 2022, the volume sold are increasing, which is positive, means they are able to increase the business little by little. And the distribution and the energy distribution EBIT is quite stable, even if the volumes are growing. but this means that sooner or later, if they are able to keep up the margins, the EBIT should also increase. In the electricity production business, it carries a negative EBIT because they've been growing assets in operations by almost 2 in the last 4 years. This represents significant costs of installation, but once the company grows at lower rates, the EBIT should also increase. In the cash flow statement, the operating activities are generating a lot of cash. During the last years, they have been able to generate double the cash than the net profits. Then in the investing activities, they are investing an average close to the amortization and depreciation. But if we remember the slide of the volumes, the group is increasing the volumes sold without heavy new investments, just maintaining the main infrastructure. And this means that they are managing the capital allocation quite smartly so far. And in the financial operations, most of the exits of cash are coming from dividends and net decrease of debt. In the balance sheet, the short-term assets double the short-term liabilities, so they have a strong liquid position, and there's nothing else to add. Strong equity, but yeah, that's all. In the debt ratio, the company has been reducing the net debt in the last years. We can also see that the PE of the company is quite low, and looking at the cash generation and the profits makes sense. The company is generating very similar amounts of cash than the profits they have overall. Then the ROE and ROA are average for the sector, nothing too special, but yeah, just to keep mentioning. The company doesn't have a clear owner, but this is due to the legal structure, and the voting power is mainly controlled by the management. In the shareholder remuneration, Rubis maintain a progressive dividend policy, boasting over 30 consecutive years of dividend increases with quite a high payout ratio, often exceeding 60 to 70% of the earnings. So for some of those interested in dividends, this company could be an interesting option. And with all this being said, I leave to your judgment the quality of the company, and see you in future videos.